Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the E-mini futures contract and put together a trade plan for the week ahead and identify some high probability action areas and some price targets for the coming weeks. So before we jump into the technical picture, as always, want to take a look at where we are in terms of market performance, calendar for the week ahead, and broader market context in terms of internals. And then we'll review the technical picture and, like I say, identify the action areas and price targets for this week. So last week, the S&P 500 gained 3.7% on the week and closed out November with a very slight gain. We'll talk more about that in the technical update. For the year to date now, the S&P 500 is up 16.4%, and it sits at 1% from the all-time highs. All sectors were winners last week, with consumer discretionary and information tech leading with almost 5% gains for the week. So a very solid week. The seasonal tendencies, the seasonal patterns played out last week, and every day saw a positive close. So in terms of the market dynamic, really the focus currently is on the Fed, and the market now pricing in an 87% chance of a rate cut next week. The Fed are now in a quiet period. What is noteworthy is that we're also, or Trump has informed the markets that he has made his decision on the Fed chair. It looks like Hassett, and he's considered to be a dovish pick and supportive of Trump policies. So that also will add further tailwind to, or potential tailwind to equities as we head into the holiday period. In terms of the calendar for the week ahead, we get ISM manufacturing PMIs today. We'll also hear from Powell today. But given the dynamic with respect to the focus shifting to Hassett, it's going to be interesting over these coming weeks to see how much attention really the markets continue to pay to Powell. He's almost lame duck Fed chair at this stage, especially if Trump comes out before the holidays or even before next week's meeting to confirm that Hassett is the new Fed chair pick. That's going to leave a bit of a dilemma for markets in terms of where their focus is in the coming weeks. So I want to factor that into our thinking. In terms of further data, Wednesday, ADP, ISM services, PMIs, Thursday, jobless claims, Friday, core PCE and UMIsh consumer sentiment. Obviously, the government fully reopened now, and the data continues to trickle in. Noteworthy that Powell's speech will be talking, but this appears that it might actually be more of a discussion forum on someone else's economic accompaniments. So he might not actually have any additional information, and certainly with the blackout regarding the Fed meeting. So again, the Powell speech may not be as important as usual today. So just want to factor that in. In terms of where we are in breadth, so given last week's price action, we've seen a notable improvement in market breadth. So stocks trading over their 20-day moving average is now at 77% versus 47% the week prior. Stocks over the 50-day is 58% versus 39% the week prior. And most importantly, stocks over the 200-day moving average now sits at 60% versus 53% the week prior. So the notable buying that we saw through the holiday week has almost ticked breadth up into to overbought territory. That short-term caution that I warned about into the back end of last week is warranted. We have seen a pop higher in the VIX this morning as well. So we are seeing a little bit of back and filling to start the week here. So moving to the technical picture, we got the monthly close. Obviously now that candle, the monthly candle up here on the left-hand side, technical hanging man pattern. And most notably, the candle was responsible for ending 6 months of one time framing higher and puts the monthly market structure now into a 2-month balance zone. And like I say, the candle is a hanging man, which traditionally is bearish, but we will need to see confirmation, which would not occur until after the December candle closes. So plenty of scope there. November's range was from 65.21 to 68.70. So that gives us a halfway back on the month at 67.08. Keep that level in mind. Trading above 68.70 and using November's high as support would target the all-time highs, and a successful break to the upside of the 2-month balance would put in place a target of our fifth wave extension zone, as referenced from last week, which would see us trading towards, I think, 7,300. So we'll note that the move from the lows that we saw into those 65.20s came on the back end of a 3-wave corrective sequence and a sharp reversal. So looking from a technical perspective on the daily time frame, if we can start to see closes above 69.10, then we're going to be targeting that test of all-time highs, and then slowly building then to our fifth wave upside extension target would be the broader game plan. On the weekly time frame, still last week we had a bearish reversal in terms of the five-week volume weighted average price, but that was negated with last week's close. So the momentum on the weekly time frame has returned to the upside, and the breaking of last week's high at 68.50s would start one time framing higher on a weekly time frame, and so I want to factor that in mind. And that would also encompass our weekly expected range, which is plus or minus 82 points, given Friday's settle. Talk more about that shortly. So the setup at this stage looks constructive, but we do have that break on the monthly time frame in terms of the one time framing higher, and the technical pattern in terms of the monthly candle being having a bearish lean, but in terms of momentum, we remain bullish on the VWAP components, and focus remains on the upside. In terms of moving to the this week's setups and where I see the opportunities developing, like I say, plus or minus 82 points is our weekly expected range. So that gives an upside target of 69.43, so almost back into those all-time highs at the 69.50s. To the downside, it comes in at 67.73 is the area. So that will be really the first area of interest for me as we come into the week. Any move into that zone, bullish reversal patterns there, I'd be looking to engage on the long side, looking for a move then back through last week's highs to target this week's weekly expected range resistance. I am actually using a slightly lower weekly bull bear zone. There is the potential, I think, that we could see a slightly deeper pullback, working off some of those overbought conditions from a technical perspective. So for me on the week, any move back into the 67.50 to 67.40 is going to be a key test. So I'm watching specifically for bullish reversal patterns in that zone to set longer term swing trades targeting further upside, and same upside objectives being the weekly projected range to the upside into those 69.40s. Certainly as we get into that area, there's the potential that we get a little bit of profit taking, and so I'd look for pullbacks. But as always, I take this a session at a time. These are the broader targets, and so I'll update the setups going on a day-by-day basis, obviously through my trade plan on the Tickmill blog. But that's the setup of the key levels that I'm looking at as we start the week. At this stage, it's really going to take a close back through 6,700 to set the focus more firmly to the downside, and I'd be thinking then about a move back into test the 66.60s as the first key downside target if we start to see a daily close through 6,700. But like I say, for now, my focus is on the upside and looking for entries on the long side. So 67.70s as the first area of potential support, 6750, 6740 being the weekly bull bear zone, and we're going to target weekly projected range resistance. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.